यहाँ से कर आपको Hello everyone, this is Alisha Gupta representing Nishkaera. We are extremely excited to host this webinar and we hope you are equally excited as to be a part of this webinar.
So we welcome you all to our webinar on P2P platform. This is a new way of investing and lending.
We thank you for taking time on the weekend to join us today.
First of all, I would like to introduce our speakers. We have with us Mr. Sandip, who is one of the founding member of Liquiloans. Liquiloan is a P2P lending company which was founded in 2018 and now is among the leading P2P company in India. Mr. Sandip, welcome Sandip sir.
Thank you so much.
We have Mr. Mukesh Vijayavargiya, who is the founder of Nishkaera. Mr. Mukesh is a highly experienced professional with over 20 years of professional experience and has worked with top companies like BG India, Reliance Industries, and Reliance Powers, to name a few. He also associated with few startup companies in different capacities before starting his own venture. Welcome, Mukesh sir.
We also have Mr. Saurabh Garg, who is also from the founding team of Nishkaera. Mr. Saurabh Garg is a chartered accountant, valuation expert, startup enthusiast. He has over 20 years of corporate experience in organizations like NTPC, Lanco, R Power, to name a few. And we welcome you, Saurabh sir.
Thank you.
We also have Mr. Raj, who is also from the founding team of Nishkaera. He is taking care of all the technical aspects of Nishkaera. We welcome you, Raj sir.
Thank you.
So without making you wait anymore, we would like to start the webinar with a brief presentation for our company, Nishkaera. I would request Saurabh sir to make the presentation.
Yep. Thank you, Alisha. So we found Nishkaera in 2020. We were having the idea of bringing back the golden era, right? So as name suggests, the more emphasis on the bringing back the golden era. That means we want to prosper our country as it was in the earlier days. Accordingly, what we can do in it now, what we can do is whatsoever the resources we are having, why not to utilize best of it so that we can reap the benefit in future and gain the maximum benefit out of it. So accordingly, we are blending the products, various financial products with the technology, so that can have a right reach to the last mile also. So the persons who are deprived right now from the financial inclusion, we want to include all those guys as well within the framework. Now the thing is how we want to do it. What is the philosophy of the Nishkaera? So philosophy of the Nishkaera is first get gyan, then do karma, and then wait for your fall. Something like as per our ancient scriptures. So we are providing a lot of educational material. We are doing webinars. We are providing a lot of blog. We are writing a lot of blogs and various other articles and publishing at the various forums, so that our customers can get the best of the knowledge what they are supposed to get. And then based on the knowledge, we are helping them in investing, suggesting, helping in investing their money. And then after that they can get the results in terms of the higher return and the better return which is suiting to their requirements. So as far as our products are concerned, we are dealing from fixed income to the market linked products. So first is the fixed income, which is the most exploited category in India. Typically, conventionally, fixed deposits was the major product which anybody and everybody probably have invested in. But there are a couple of more products which we can invest in and get the benefit of higher returns, maybe in the form of NCDs, bonds, P2P platform. In addition to that, insurance, we all, I guess, are having the enough insurance to cover the various risks in the life, maybe from the life to vehicle to travel to any other general purpose insurances. When we are doing a business or when we are buying any kind of a asset, then definitely we need certain kind of loans. So we are having a multiple loan propositions catering to the various needs of the personal, individual, as well as the business side. So when we talk about the individuals, there is a loan against property, loan against security, housing loan, personal loan. But the moment we talk about the business loan, we are having a supply chain, working management, term loan kind of a thing. On the top of it, we are having a certain very good product in terms of uh, loan against security, under which even a low CIBIL candidate can get a loan based on whatsoever he or her is having investments in the securities. In addition to that, as I already mentioned, we are heavily depending on the gyan. So for spreading the gyan, we are having a services section and doing a lot of activities on the education and the analysis front. So in under the education, we are doing the webinars, we are writing the blogs, we are issuing multiple publications like daily digest, market buys, and doing IPO research and a lot many things. And in addition to that, last piece of it is the advisory, which we are doing from Nishkaera. So without taking much of the time, because there's a lot of products which I can talk about, but I am just touching upon all these products in a brief. And without taking much of time, I would like to give mic to Alicia again so that she can proceed further. Thank you, Alicia.
Thank you, Saurabh sir. There are various investment products available in the market. However, P2P lending platform is one of the most exciting investment product yet under the fixed income category. But it is a new and emerging product with a lot of promise, and it can be a game changer, especially for those investors who want high returns at low risk.
So today we will be discussing the basics of peer-to-peer lending and how it differs from other traditional fixed income products like fixed deposits, funds, etc. lending methods.
We will also cover the benefits and risks associated with P2P lending platforms, as well as investment schemes offered by these platforms for investors.
Whether you are new to P2P lending platforms or an experienced participant investor, we are sure hope you will find this webinar informative and valuable.
To understand the basics of P2P lending platform and its journey till now, I would like to call up Mr. Saurabh to make a small presentation.
Thank you. Thank you, Alicia. So next slide, please. Yeah. So P2P platform, as it is having a word lending. I guess everybody is comfortable with the word lending. Lending is basically when somebody allows another person to borrow from some other with the promise that he will return it, maybe with interest, not interest, or maybe in money or in any other form. So irrespective of the form, lending is happening in India since very beginning, or I guess across globe is happening since very beginning. Yeah. So now coming to this, what is P2P lending? Typically, to cater to the various requirements, we were having the banks and the various other methods. And typically in India, we can talk about the sahukars and various other things, right? So the person who are into the organized sector, they are directly approaching the banks or the organized sector to get the funding. But there is a lot of unorganized sector in India, which is also spreading across because these banks and NBFCs were not able to do it, and they are not interested to lend to a smaller guys, or in a sense to a smaller loan kind of a thing, retail loans which is less than 2 lakhs or 3 lakhs kind of a thing, because their cost of funding, their cost of managing those accounts is much higher. So in and based on the historical things, it gradually there is a one product creeped up, that is the P2P lending. In this P2P lending, uh, it is a method to obtain loans directly from the individuals, cutting out the financial institutions as a middleman. So although the name says it's a P2P lending, but these companies are not actually lending based on their funds. It is a basically you and me who can invest, and on the other side there are borrowers who can get the funding based on our investments, right? So it is started, as I mentioned, it started from an unorganized sector, like wealthy people are giving money within their circles or within their knowns, and then it's moved into an unregulated thing where technology started getting enabled, and the reach of the wealthy people, all these wealthy peoples who want to invest and to want to lend money, got the wider reach through the use of technology, and then move into the regulated sector when in 2017 RBI came out with the regulations to put certain checks and balances in place, so that there is no fly by night operator, and all the investors can get their money back, and they can be securities around that, and to make a more transparent manner of regulating this sector. Because in the earliest, before 2017, when this sector started in India, there was a lot of issues which were creeped in as a normal evaluation process, right? So how this is different from the banks now, right? So in banks, typically you go to the bank, right? Banks lend their own money, and if you are investor, you typically invest in the form of uh, FDs, bank accounts, and something like that. But however, in P2P, P2P platforms cannot take or borrow money from any person. So it is they are just basically the facilitator, and all the money and all the transactions are being kept in a escrow account, which is managed by a third party trustee. So your money is not going direct, or the lender's money is not going directly into the P2P platform's bank account. It is the escrow account, and from escrow account, a trustee is managing the all cash flows, and based on the uh, approved guidelines, they are distributing this money among the various borrowers. When we talk about these borrower, it is not that everybody is going to get the money from these players. There are certain checks and balances all these companies have put in place, so that they can recover all those money, and your risk profile goes down, and you can have a better returns profile, right? So now coming to what are the benefit to the investors. So investors are getting a multiple benefits by investing in this. Definitely, it is a high yielding product where investor can get a better than the market kind of a returns. And typically, when I'm talking about the market, it's basically the fixed income market. Then, because your money is getting distributed into the multiple borrowers, the risk diversification is there. uh, these P2P platforms are putting forward their certain checks and balance regarding to whom they want to give this money to. That's why the credit worthiness is there. And because of these two reasons, there is definitely a low credit default as far as these P2P platforms are concerned. Even in the worst scenario of COVID, these P2P platform performed well than better than the most of the banks. As I mentioned, this is a high yielding product, so definitely you can assured of that you will be getting returns which are more than your inflation. On the top of it, generally, if you are investing in a bank FDs, you either you have to give the form H, form G, 15 H, 15G, or banks will be eligible to deduct the TDS. Here, there will be no TDS whatsoever the interest you are generating. So, and based on your requirement, timelines, and everything, there are multiple schemes of these lenders, these P2P platform where one can invest in. So there's a lot many benefits to the investor that is making this is one of the most favored product in the future. And that's how we are organizing to make all of you aware about the benefits of the P2P platform. Now coming to the next thing, why I should invest in P2P, and are people investing in fixed income products or the alternate asset product? The answer is yes. Even if we see historically and even as of now, this is the broad bifurcation of India's investment. So still, even today, more than 70% of money being invested in fixed income products and alternate asset product. It's We talk a lot about the equities, mutual funds, and the related product, but still there is only a 13% allocation of India's invested money into the equities. So there is a lot of scope in this, and lot of investment is going into the fixed and the alternate asset products. So when we talk about returns, there is usually a perception. We have seen that fixed income are good. You should do this. You should do that, and markets are giving better returns. So there is a lot many things which keeps on happening. But is that return is a real return? Because the moment we talk about the returns, inflation comes into the picture, and inflation certainly distort the whole picture very differently. Because when we on the left hand side, if you see, we try to compare the fixed deposit rates with the inflation. And if you see from before 1991, just because of the inflation, average FD rates were lower than that, although they were at 12% kind of a thing. So I guess since then we have never seen that kind of FD returns, and everybody would like to see that. But even because of the inflation of 13 and 14%, we were actually having a negative returns. And on the right hand side, exactly, it just talked about what is your real return. So at certain times, the real returns are in negative, heavily negative. So w- why it is happening? It is happening just because we are not giving consideration to the inflation which we should give to. The reason being why we are not giving importance to the inflation is because we read a lot, we talk about a lot, but when we see our bank account, we are seeing 100 rupees is getting 102. So we are not getting bothered about whether inflation, whether what is the purchasing power of this money. So that's how my understanding on the inflation and returns is in a quick manner. And then if we talk about currently what are the returns we are getting in the fixed income category, that's completely based on the product and the tenure one is investing into. But even if I look at broadly at return and product ratio, uh, all the all the FDs and mutual fund schemes which are investing in debt, they are giving somewhere around 7.5, not more than that. While the P2P platforms are giving an opportunity to earn more than 8%. So 8% is the starting point for our partners. And the moment we are binding ourselves into a long-term contracts with them, there is a definitely higher returns on this, right? Exactly. If you see this chart from 8%, P2P investment returns are starting, while most of the other product on the left hand side are ending at 7.74. So this is based on the various product and adjusting the expense and everything to them, right? So so the Liquiloans and Lending Club are our partners to P2P platform. And without taking much of time, I would request Alicia and Monica to invite our guest, Mr. Sandeep, for detailed explanation, detailed information on the P2P platform, and as well as make us understand the Liquiloans schemes.
Thank you, Saurabh sir. It was quite an insightful presentation. Now I would like to call upon Mr. Sandip Chandran from Liquiloans to talk more about P2P lending platforms and what Liquiloan is offering in the space for investors. Sandip sir, please.
Hi, thank you so much, Nishkaera team, and thank you, Saurabh sir, for the kind introduction. I'll just share my screen. Just continue the presentation. Is my screen visible? Hello?
I'm sorry, sir. I'll stop sharing the screen.
Sure.
Visible now.
Is my screen visible now?
Yes, sir. Yes.
Yes, yes,
Yeah.
yes. It is visible,
Sure.
please.
Yeah. Thank you so much. So I'll just quickly give you a brief about Liquiloans as a company and what we do, and then if there are any further questions, we'll be more than happy to take them. So essentially, we are a peer-to-peer NBFC. This is a special dispensation NBFC which the RBI gave out licenses somewhere in late 2017. We were founded in 2018 by Achal and Gautam, who are ex-co-founders of this company called Rento Mojo as well. I was essentially the first person to join, so I've seen the growth of the company from day zero. We are a profitable fintech entity. We work with almost 1,200 plus partners pan India and have investors and borrowers across the country. So why do investors like us? Essentially, what I feel is that we have a smarter fixed income solution. And the reason why I say that is because of all the reasons that you see on the screen. So essentially inflation beating returns along with very, very high level of certainty and margin of safety. It's a completely unrelated or uncorrelated asset class where we don't have any sort of direct correlation to debt or equity markets movements in the country. Easy liquidity. In the liquid scheme, you can redeem in T+1 or worst case T+2 days. You can also, we also have SIP option where you can sort of create a saving discipline habit. There are monthly payout options in every scheme available. So if you require a monthly payout sort of scheme for your client, that is also available. And schemes are available for long-term and short-term goals as well. So anything, 3 years and below, this is a perfect fit for your sort of fixed income, savings product or fixed income alternate product, I would say. So so essentially there are three parts, right? There is a borrower, there is a platform, and there is a lender. So talking about the borrowers first, what kind of borrowers do we cater to and how do we maintain the credit worthiness of these borrowers is what I'll talk about. So essentially, These are not personal loans that we do like other platforms. These are no-cost consumer loans, primarily opted for by people who are not looking for a loan, but who are looking for a service. I'll explain further in the next slide. But essentially, if you look at my borrower, he is not looking for a loan, he is looking for a service, and he is looking at us more like a mode of payment. So it's a point of sale sort of process where essentially he thinks of us like a mode of payment, right? And for the borrowers, there are 100 plus parameters that we check, but essentially there are three basic criteria that we evaluate. And what are these criteria? One is your credit check, which essentially is your CIBIL score or experience score or CRIF score, which are the credit reporting agencies in India. Anything greater than 700 plus is considered to be a healthy credit score, and that is what we want. We want borrowers whose CIBIL score or credit score is greater than 700 plus, which essentially means that he's taken multiple credit lines and he's paid off on time across all these credit lines. Also, there is enough and more credit history that he has built and established to earn this credit score, right? So that is the first check, which is your credit check. Then is your income check. Now, my average borrower is someone who lives in a metro or tier 1 salary and who's earning 10 lakhs plus salary annually. This is a very sort of cream, layer of borrowers where everyone is catered, what everyone wants to cater to, but everyone is finding out how they can cater to. So here, essentially, anyone who has a CIBIL score of 700 plus earning 10 lakh rupees and taking short-term loans, this becomes a very, very good asset class to have, right? Again, what all do we check? Within income, we check his annual income, we check his FOIR, which is your fixed obligation to income ratio. Out of 100 rupees that you're earning, what is your expenditure or expenses in a month, right? And there is a cap at which we sort of evaluate these borrowers. If he's greater than 50-60% of his money is going into expenses, then we will not like to underwrite such a borrower. So there also we have capping in terms of income and FOIR as well. We also check for ITR and last 6 months bank statements. Along with that, what is the third pillar of credit sort of criteria or credit check is the employment check. Where is he working? Is he salaried or self-employed? What all companies has he worked for? Has he gone up in progression in terms of career growth? What is his designation? And like I was mentioning, if he's based in a metro, tier 1 or tier 2. Essentially, we are catering to metro and tier 1 only. Along with that, all your investors get something like a borrower scorecard that you see on the slide, where it will tell you his CIBIL score, his income, his salary, his city, what is his FOIR. All these sort of 8 to 10 critical data points that we evaluate is visible to each and every investor on the platform. Now, why do we say that these are credit-worthy borrowers, right? So, like Sir was mentioning, there are various P2P platforms and with various business models. This is a business model that we are comfortable with. The reason why we are comfortable with is that anyone who has a great CIBIL score or a credit score of 700 plus, like I was mentioning on the previous slide also, is someone who has multiple credit lines, has paid off his loans or his EMIs on time consistently in the past, and has enough and more credit history for us to evaluate such kind of a borrower, right? So within retail borrowers itself, you'll have prime, you'll have near prime, you'll have subprime. Now, again, I'm not getting into business models of other platforms, but we as a platform only cater to 700 plus prime retail borrowers. And that is our comfort zone and sweet spot. And that is why we feel that investments in Liquiloans is quite safe, is because your asset class or the borrowers that we are catering to are quite safe. So then essentially the question is that why would someone whose CIBIL score is greater than 700 plus, who has enough and more salary and savings, come to Liquiloans to borrow? He will get a personal loan from his bank at an extremely competitive rate. Why should he come to a peer-to-peer NBFC to borrow? The reason is very, very simple. We are not trying to reinvent the wheel. We are only saying that if the borrower does not pay any interest on the loan, then he becomes agnostic or indifferent to the service provider. And how do we do that? Is by offering no-cost loans primarily in 3 segments, which is healthcare, home decor, and discretionary non-fatal, upskilling education, right? So these are not borrowers who are looking for a personal loan who come on Liquiloans platform to borrow. They go to my 300 plus dealer partner network, which I have established in these 3 segments, and avail a no-cost proposition from these dealer partners. So essentially, it is some form of subvention or invoice discounting or bill discounting, where the borrower does not pay me any interest. The interest is borne by my partner or dealer sort of network. right? And who are these partners that I work with? Within upskilling education. So please keep in mind that I only do upskilling education. I don't do K-12 education, or I don't do education for first standard to 12th standard, extra tuition or online classes. I don't cater to all these sort of courses. I only cater to salaried individuals who are looking to upskill or grow in their careers. That is why they take a data science course or AI/ML course or a programming course, something like that, where obviously their income increases, along with that their profile and career growth becomes stronger. They can't go back to do an MBA or a CA or an engineering degree, but they can always upskill themselves. CEOs and MDs are upskilling, so it is essentially very, very important for everyone across the industry to upskill. It's not a fad anymore; it has become a necessity. So the first segment that we are in is upskilling upskilling education financing, sorry. And few of the partners are Upgrad, Quantinsti, Marticus, SPJN, Jain University, NMIMS, Great Lakes, etc. The second segment is discretionary non-fatal healthcare. I do not cater to essentially a knee surgery or an angioplasty or a kidney sort of replacement procedure, which is a last mile treatment, where the people may have exhausted all their capital and are then looking for some sort of a loan for the next procedure, right? These are not those kind of treatments. These are discretionary non-fatal treatments. These are sort of treatments that fall in the lower category of luxury treatment, something like a skin care, a hair care, IVF, stem cell banking, something like that, where insurance coverage is not available. You have enough and more money with you, but if I give you a no-cost option, you may end up taking it. Because logically, if you think about it, if I don't have 1 lakh rupee for a hair care treatment or a skin care treatment, I will not take a loan for the same. But if you offer me a no-cost EMI, I may end up taking it, right? So that is why we have people who are earning 5-6 lakh rupees. Just an example, someone who's earning 5-6 lakh rupees is applying for a 40,000 or 50,000 rupee Dr. Batra treatment on a platform. Does it make sense financially or logically? No, but you have to think of it from the consumer point of view, that he's already there and he does not want to spend all that money in one go. If an EMI option is available, why not take it, right? And we have to thank Bajaj Finance for, the penetration of EMI-based financing across the country. So we are just one of the few sort of startups or companies which have evolved thanks to what Bajaj has been doing for the last 15-20 years, right? So who all are our partners in discretionary non-fatal healthcare? People like Dr. Batra, Richfield, VRPC, Cloud9, Indira IVF, Morpheus IVF. These sort of alternate treatments is what we cater to, right? The third category is home decor, where if you want to, furnish a 1 BHK or 2 BHK, you want to do up your, kitchen, you want to install a modular kitchen, something like that. So we partnered with people like Home Decor, Live Space, Bonito Design, and there are regional players in every city that we partner with who offer interior design solutions, right? Again, this is not a product that comes in your hand. This is more of a service. So these are the three main segments that we are in, which is education, healthcare, and home decor, where we offer no-cost EMIs on service-based products. Again, not a product, physical product which you get in your hand, but service. Good part about it is that you, as a borrower, only you can consume this service, right? Because the loan does not come to you, it goes into the dealer's account directly. So essentially, there's no money that you get. So the biggest risk in personal loan is the risk of fraud, which is completely eliminated. Also, you can't sell this service. You only have to consume this service, right? So the burden or the impetus of the EMI has to be borne by you and the borrower only. You can't sell this service to someone else. So these are the two main advantages with these sort of loans or no-cost consumer loans. Is A, the money does not go to the borrower, and B, he has to consume the service instead. So the question arises is that what is the EMI that we see on these sort of loans, and what do we do to recover NPAs or defaults, if any, right? So my current default rate or NPA is 0.63%, which is the industry best. Again, I understand that loan book may not be as large as a bank or someone like a Bajaj Finance, but what we've seen is that these borrowers who are salaried, tier 1 located, metro located, earning, above average, if not very good income, is that they always feel CIBIL is very, very crucial for them, because you are living on loans all your life, right? Even though you may have the means not to take loans, but still a loan is a smarter option in terms of savings and investment, right? People who have the money also take a home loan, take a personal loan. They're taking consumer loans with us, right? So you have to take loans as you move along the sort of career growth or life stages, and you don't want your CIBIL to get impacted by something which is so small in the grand scheme of things, right? अगर आप देखें कि अगर you know if you're taking a 3-4 lakh rupee home loan and if you lose your job, that is something which you may not be able to service, because that's genuinely and 3-4 crore home loan and a 3-4 lakh EMI is something which is difficult to service if you don't have a job. But something which is a 50,000-60,000 rupee product in nature and essentially a 5,000-6,000 rupee EMI is something you can easily pay off on time, because utni to aapke emergency funds mein khud rahegi, right? So you don't want to default on these small loans, because you have to take loans going forward as well, right? And you don't want your score to get affected because of something so small. Just in case, if there are issues, what do? We have almost a 25-30 member team now who do follow up on phone, on email, and follow up with the clients for repayments. Also, if the loan crosses 90 days, essentially if the repayment period crosses 90 days, if you're not paid within 90 days, then there are cash collection agencies that we deploy. There are 20 plus agencies across the country who sort of work with us to, make sure that agar NPA hota bhi, it is at a minimum level, right? Again, the good part about it is that we don't have to take any sort of, forced methods that we read about in newspapers or WhatsApp forwards aapko aate hai because NBFC ने ये किया है, वो किया है, right? हमको ये सब करने की जरूरत नहीं है, because these are all credit worthy borrowers जो पहले ही समझते हैं कि हमको ये लोन लेना है. So essentially क्या हो जाता है, like couple of examples, अगर आपने एक IVF treatment लिया, now IVF is a very emotionally charged treatment, right? If you may not get the desired result, you may say I will not pay the EMI, but you know that these sort of services are not, there's no guarantee of outcome, right? You knew that going into this, आपने window shopping करके ये service तो नहीं किया, that you very well knew what you're getting into. So then you have to pay the EMI on time, right? So also something like a hair care treatment, right? Agar, for example, me, if I go to a doctor batra and say mere baal nahi aaye, to wo bolenge isme guarantee thodi hai, right? Some people may, it may work for someone, it may not work for someone. There's no guarantee on these sort of procedures. And the good part is that you don't do window shopping on these services, right? You very well know what you're getting into, right? So there are those few cases where, in spite of all of this, they do tend not to pay, maybe less than 1% of, like I was mentioning, the population or the borrowers. That case is where these are the steps that we take. Again, also, because he signs a NASH mandate with me, I can, if he's not keeping enough and more in his account, I can put a willful defaulter tag in his CIBIL score or credit score as well, which then Section 25 of Payment and Settlements Act applies, and he can also be put behind bars. But these sort of extreme steps in these sort of borrowers is not required, is what I'm trying to say. Everything is there on paper. Theoretically, we can do everything, but we don't need to resort to any of these steps because of the quality of the borrowers. Essentially, one very, very critical point that I would like to maintain is that, and I'm sure, सौरभ सर आपको भी ये questions आते होंगे कि यार ये 2-3% के लिए मैं risk क्यों लूं, right? What we are trying to say is that the risk is a startup risk or a brand risk. It is not a business model risk, and I'll tell you why. Because if you look at, NPS across top 5 banks in the country in the last 5 years, that essentially has a weighted average of almost 7.5%. Corporate loans की मैं बात कर रहा हूँ. But if you look at the same bank's retail loan book, that only has an NPA of 1.5%. But all your NCDs, your bonds, your debt mutual funds, and 2/3 of your FDs have exposure only in corporate. So are they as safe as projected? The answer is no, because the evidence is quite clear. If there is almost 7.5%, gross NPA across corporate loans, then someone has to take the hit of it. You may not take it, but going forward somewhere, this will affect some people, right? So it is not as safe as projected. Now, I'm not saying that, there is 20-25 years of history for you to put your money in these sort of products, 100%. But what I'm trying to say is that the risk that you perceive in a P2P product or in a product like us is not as high as you think, because just by pure comparison of, corporate loans versus retail loans, I can see that retail loans are safer. Now, within retail also, you'll have good, bad, and ugly. like I was mentioning in the previous couple of slides before, I only give you the best of best retail borrowers. तो उसमें तो NPA और भी कम है, and my performance also proves it, which with a 0.6% NPA, right? Just a second. So like I was mentioning, you know, there is high overexposure to corporates in this country, specifically AAA rated corporates. Now AAA also is very, very debatable who's AAA and who's not, right? So I don't want to get into all of that, but all I'm trying to say is that most of your money in fixed income is in corporates. There is severe underutilization of retail debt as an asset class, which is actually a safer asset, right? What we are trying to do is to create a retail debt asset class for you, maintain, if not the same, if not higher, at least the same level of safety that a corporate loan will ensure, right? I personally believe that we provide higher level of safety, but even if that is not the case, these are as safe, if not safer, as compared to a corporate sort of debt product, right? Again, you know, just adding a few more sort of data points to what I'm speaking. People always feel corporate loans are secure because corporate loans are safer because they're secure. कुछ नहीं तो बेच के निकल सकते, right? That is what we feel. But आप बेच के भी नहीं निकल पाते ना, because as per NCLT data, out of almost 5,300 cases that are currently, you know, admitted in NCLT, 2/3 of them have been closed. Still, only 1/3 of the recovery has been possible. That is the critical thing to note is that through liquidation or through recovery, only 8% of the money has been able to be recovered and given back to clients. Now, this is an eye-opening number, I feel, right? Because how safe are corporate loans? If you're saying they're secure, then only 1/3 of the cases have been resolved. 2/3 of the cases are still pending. So we need to also pay careful attention to the fact that yes, these are unsecured, these are secured loans, corporate loans may be secured, but what is the resolution of these cases, right? Also, we get a lot of questions ki aap to completely unsecured or these are 100% unsecured loans. What is the guarantee or safety on these loans? One critical data point to note is that within retail loans in India, secured loans have a higher NPA as compared to unsecured loans. Home loan, loan against property, business loans with collateral, auto loans have an NPA of 2.6%, while credit card, outstanding and personal loan have an NPA of 0.9%. What am I trying to say here is that don't just look at secured versus unsecured, look at amount and tenure versus amount and tenure. If you do cash flow based lending for small ticket sizes for short tenures, there is 100% probability or almost as close to 100% probability that you'll get your money back. If you do network based lending for longer tenures for very, very high amounts, it becomes difficult to predict in terms of recovery. So AAA versus non-AAA or secured versus unsecured is not the debate that you should be, you know, looking at. You should always look at amount and tenure versus amount and tenure. So essentially, what do we do to make sure that your capital is protected? Okay. So there are 5 basic things that we do to make sure that your capital is protected. And how do we mitigate these risks? So 5 risks. The first is the counterparty risk, right? Good part is like Saurabh sir was mentioning, the money doesn't come to me. So it goes into a third party escrow trustee account. I only have viewing rights. I have no operating rights on this account. So मैं आपके पैसे लेके किधर भाग ही नहीं सकता. Money can never leave the ecosystem. Even if Liquiloans shuts shop tomorrow, the trustee has all the details. He will pay you out. Liquiloans as an entity, even if we survive or we don't survive, your money is absolutely safe because it doesn't come to me, right? B, concentration risk, right? It is my personal belief that something like a DHFL or an ILNF has happened. We incorrectly rated these companies. I believe that we had unnecessary exposure to such companies, right? If your fund manager only had exposure to 10-15 companies and उसमें DHFL ILNF has निकला, तो आपका almost 6-7% capital erode erode हुआ होगा, right? But I'm saying even at 10,000 rupees, if I give you between 200 to 400 borrowers, your risk to one borrower is not greater than 0.5%. Your risk is mitigated to such a large level that even if there are defaults, it will not affect your portfolio to a very, very large level because of the sheer diversification that I provide, right? Credit risk, I was mentioning, we only give you best of best retail borrowers. So these are like AAA rated retail borrowers. Interest rate risk, like I was mentioning in the first slide itself, we have no direct correlation to debt or equity markets. So the rate at which you enter is what you get. So there is no possibility of mark to market losses. These are not like bonds which can move up and down and then you can have a certain impact on your return. The rate at which you enter is the rate that you get, essentially. And the most important risk is the risk of alignment, right? How aligned is the company to the investor? Forget about capital, capital protection, forget about return. Is the company aligned to your interest? We are 100% aligned because we only make money if you make your return, right? This is clearly mentioned in the agreement also. You make your first set of return, whatever scheme you've chosen. अगर आप वो नहीं बनाते, तो Liquiloans as a company tends to earn zero from fees. We only make money if you make money. So because we are 100% aligned to you, I will not get into segments that I am not comfortable with. कल उठ के मैं business loan नहीं कर पाऊंगा because मुझे A तो मेरी expertise है नहीं वो segment में and B NPAs बढ़ते तो वो मेरे fees से जाते, right? So I don't want to take that risk. That is why I will always look at segments and borrowers that I am comfortable. Because my revenue is directly impacted by how much you make. So hurdle rate वगैरह तो PMS वगैरह में भी होते हैं, but still there is a management fee. My 100% of my income comes only if you make your money. So it is well and good to say that I have a 0.63% NPA, but how true is that, right? So we got our portfolio evaluated by ICRA also. They feel that a worst case NPA in this sort of a borrower pool can be between 0.94 to 1.17%, right? Even if that was the case, I have a almost 13 to 14% buffer for any sort of NPA, right? Because my average yield is around 9.5%. I make 22 to 23% through subvention gross IRR annualized on my portfolio. पहला जो 8 से 10.5% है वो investor को जाता है, right? So on an average, I have 13% NPA buffer, which is almost 1100 times what ICRA's estimate is. So things have to go drastically wrong for even your interest to get affected. Forget your capital. Your capital is always safe. But अगर आपकी interest भी affect होनी है तो बहुत something has to go really, really wrong, which I don't think this sort of a proposition, it is difficult to go wrong. Because if I'm giving small loans to salaried borrowers in metros, उतना ही हो सकता है default. 2-3% के ऊपर history में नहीं हुआ है, industry में नहीं हुआ है, तो हम will, I don't know how we can reach a number of 10-11%. So that's why we feel that, you know, as even if you were to consider ICRA's estimate, we are still providing you a 11 times cushion for your NPS. Like I was mentioning, 13% is the margin of safety that we maintain. Worst case NPA was 1.63, which was in October 2020, which was in peak of COVID. Current NPA is around 0.68%. Industry NPA is around 1.5%. Right? Worst case NPA in personal loans or in retail loans has been around 2.5%. So all the numbers point to the fact that NPAs in this industry have always been historically low. Again, people will then come back saying that India has never seen a retail credit crisis. वो तो अभी तक हमने देखा ही नहीं है, तो how can you predict? The reason why I can predict is that still my credit to GDP ratio is around 10-11%. Even though we are consuming more, we are earning more, we are still saving. So this whole mindset of, you know, spending first and saving later is not true. That's because हमको दिख रहा है, वो आँख में आती है, because we see people spending more because of post-COVID. There is also some, you know, tendency to you know, spend money, right? But we are still saving money, right? And as long as we are a savings first mentality, and it will continue to remain so, retail loan NPAs will not move too far from 1.5 to 2%. So should NRIs invest? I think Saurabh sir will be better placed to answer this question. But my sort of view on this point is that we are part of this India growth story, right? As more and more people are getting access to credit. I'll give you a small example. Around, you know, people always ask me, how scalable is this model? Like, you know, how do you know that, you know, people with this credit score, will they increase or not? Right? You know, how can we be sure of these numbers, right? In 2019, 20% of 100 people evaluated had a CIBIL score of greater than 700 plus. Today, that number stands at 39%, right? Yeah, 4 years later. Point I'm trying to make here is more and more people are getting under the sort of credit system. They are getting under this credit umbrella. People are very, very sort of careful about their CIBIL score. 10 years back when I was in city, someone with a 750 CIBIL score and with a 650 CIBIL score were getting the same rate of interest on a home loan. Today, that is not the case. With better CIBIL comes the power to negotiate. If your existing bank is not giving you a good rate, you'll go to the other bank saying, well, he's giving me 50 bits less, I'll move my entire relationship there. So people have become very, very conscious of their CIBIL score. More and more people are becoming under the credit umbrella. And as Indians, we love fixed income, right? And fixed income industry is also growing. So I personally feel that India, we are very, very closely pegged to India growth story. I think P2P as an asset class is still in its infancy. I mean, we've disbursed around 2,500 crores of loans, which is a drop in the ocean in terms of what is available out there, right? So as more and more people become credit conscious, I'll get better and better borrowers. As I move ahead, as we start competing with banks, my cost of capital will also start getting cheaper. I will also get, good quality borrowers who will also apply for personal loans with me, maybe in the future, right? So we believe that, going forward, P2P will be an asset class that will be a force to reckon with. We will get access to cheaper capital. We will see large, if not already, large penetration across metros, tier 1 cities where people are investing with us. This is a good proposition for NRIs also, because recently we've seen that for NRIs as well, the last couple of years, we've had companies are specifically looking at this product for them. So that penetration is also happening. So I think the future is very bright for India and for the P2P industry as a whole. These are a few numbers. We've disbursed almost 2,200 crores of loans. Gross NPA remains at 0.66. Total number of borrowers is 6 lakh plus. 100% withdrawals have been honored. No investor has had to wait for more than 2 days to get his funds back. And most importantly, not a single investor on the platform has lost even a rupee of interest. So out of my 60,000 investors, not a single borrower, even during COVID time, has lost even a rupee of interest on the platform. And we will continue to strive for an endeavor to keep this number the same. So what are the few options that you have? So there are essentially three schemes. One is a liquid scheme where you can come in today, you can get out tomorrow. Almost becomes like a savings bank account, right? Within T+1 or T+2 days, worst case, you get your funds back. So anyone who has money sitting in current account or savings account is not making enough for you, this becomes a great proposition, right? Double advantage scheme, if you're unsure of whether to put it in liquid or to put it in lock-in, we also have double advantage scheme, which gives you the flexibility of a liquid option and the higher return of a lock-in option as well, right? Also, we have growth schemes and monthly payout options across all schemes on our platform, right? So starting from 3 months, going up to 36 months, we have lock-in schemes, and we have double advantage schemes as well as the flagship liquid product where you can exit in T+1 or T+2 days as well. These are few of the returns that we provide. Liquid scheme, you get almost 8%. 3 months to 36 months, you get starting at 8.6, going up to 10.5%, depending upon the scheme and payout mode that you've chosen. So people again always ask, 2-3% के risk के लिए मैं क्यों करूँ ये सब, right? Again, just reiterating the fact that we are keeping it as safe, if not safer than a debt fund or a liquid fund or an FD. We only give you exposure to good quality borrowers, and we feel that returns are justified in terms of the level of safety that we are providing. Again, I understand that there is startup risk, there is brand risk, there is asset class risk, but the RBI is also quite conservative in terms of P2P lending, because that is why it has to put a cap of 50 lakh rupees on the investment and 10 lakh rupees on the borrowing, right? The money has to flow through an escrow account mechanism. The RBI is also evaluating this asset class as we move forward. So they are also quite conservative, right? So I think they are an excellent watchdog when it comes to this category. They are doing a great job with us and with banks as well. So I have full faith that as we move forward, they'll also start getting, little bit more lenient on some of these parameters. But their vigilance is always very, very high on new asset classes. So we are also very comfortable with that. So 8 to 10.5% is what you earn. Again, I believe that return versus risk is very, very well justified with us and for investors also. I think we've created a very, very safe alternate fixed income proposition for investors, where out of, let's assume 100 rupees, I think 10, 15 rupees you can easily park with us. Obviously, there are very, very sort of tried and trusted options out there. But post-COVID, people are also evaluating other products where we are also very, very sort of happy, where investor awareness has gone up. People are looking at options, and we are one of the options out there. How to invest? You can directly invest through the Nishkaera platform. Very, very easy. Everything is online. If you're CKYC verified, it takes less than 2 minutes to actually invest. Now, that's it from my end. If there are any questions, would love to take them. Any feedback, much appreciated.
Thank you so much, Mr. Sandip, for a very detailed and interesting presentation. I hope all of you must have gained a lot of information about P2P platforms now.
Now we will start with the question answer session. You may please write down your question in the chat box and we will take questions one by one. We also request you to fill the feedback form whose link has been provided in the chat box.
Should I take this question that has come in?
Yes, sir.
So the question by Mr. Nikhil Jain is, what are the charges that would be charged once the returns are received by an investor, and also if someone borrows? So with the investor also, for the borrower, there are no charges. On the investor side, we give out gross returns. There are no TDS. This is interest income from other sources, and taxes are applicable as per tax slab. So we don't cut any TDS or tax on this. You will have to pay it out yourself. Where we will provide you all the tax forms and other details, but the payment has to be done by you. On the borrower side, these are essentially no-cost loans, right? In certain, dealers or segments, there may be like a processing fee involved, but essentially these are no-cost loans. So there are no charges on either end. Yes, so no fee has to be paid by the investor. There are no hidden charges. There is no platform fee, management fee, entry fee, exit fee, processing fee, nothing. There are no charges at all for investor, and for most cases in terms of borrowers as well. What info is needed from an NRI to open an account? Just one basic information is that you can only transact through an NRO account. You cannot transact through an NRE account. That basic information is required, basic KYC. Just like any other investment, there is no additional information that I need. Only that the transaction has to happen through an NRO account. What is needed to open an NRO account? You will have to get in touch with your bank. It is not a very, very complicated procedure. Each bank has slightly different processes, but again, basic KYC and India contact and India address essentially is what you need. Does the person need to be no, the person does not need to be in the country to open it.
Any other questions, please?
How to evaluate the performance of P2P platforms? Very good question here, because I believe each platform has its own merits and demerits, right? I think you should evaluate every platform based on your risk appetite and level of safety that is provided by the platform, right? It depends on what kind of investment you're looking at. So a lot of time, what happens is that people feel that P2P is something money that you should put in, which you are okay to lose, right? I don't subscribe to this line of thought, because essentially what I'm saying is that I'm as safe, if not safer, than a debt fund. So you can very, very well put your serious money here, because serious money has never, flowed into a P2P platform, right? It's like crypto. The debate is, some people look at it very seriously, some people just look at it just, to pass the time, or, make some money. And if they lose that money also, they're okay with that. But essentially, you should judge every platform based on how safe is the asset class and what is your risk appetite, right? There are other platforms which do provide double-digit return. They provide 15-16% returns, but the only thing you should evaluate that in debt, it is very difficult to earn more than 10%, because otherwise there would be no equity market, right? If everyone is making double-digit return through debt, then what is the need for an equity market in the first place, right? Debt is something where I believe that, and Saurabh sir also, if will also tell you, I'm sure, is that capital protection has to be the first thing that you should look at, which is the most important point while investing in debt. No one has got wealthy by investing in debt. People have got rich, but people have got only wealthy by investing in equity market, right? So debt में जो आपको 10% के ऊपर देता है, please evaluate carefully what is the asset class, where is your money going, right? How safe is the asset class? And B, depending upon your risk appetite, there are enough and more products out there. I mean, if you just do a Google search of alternate fixed income, you will get 50-60 products within the country itself, right? But how good are these companies? How safe is your money? Is all that is something that you need to seriously consider. Good part for us is there are enough and more P2P companies and business models out there, so people can evaluate where to invest, how to invest, what amount to invest. But my personal request is that for us, at least, you can put in serious money. Essentially, money that you put in debt, you can put with us also. So, are there any specific guidelines or best practices that borrowers and investors should follow when using P2P lending platforms? So again, it's just an extension of the previous question, is that best practice is something that you are safe with, right? I mean, you are comfortable with, right? That is best. Two things I think that you should look at is that how aligned to your interest is the platform's interest, and B, how transparent is the platform, right? Are they giving you enough and more information of the kind of borrowers that they're catering to? And B, are they aligned to your interests or not? What is your business model? Are they only taking fees from borrowers and lenders and then you make whatever money you want? Or is there actual alignment to your interest, saying that, I will only make money if you make money, or my hurdle rate is such and such? These are some things that you can evaluate. Also, you can evaluate based on asset class and borrower quality, and depending upon, the risk that you're willing to take. Some people are okay with some risk and 12-15% returns also. So there are products available for those sort of risks as well, right? We essentially wanted to create a distributable product, because I'm not a Zerodha or a Grow where people can come online and transact, right? You always need an advisor to recommend such products to you, right? So this product, I feel, is distributable in that sense and scalable because of the borrowers that I cater to. In case of delayed or non-payment by borrowers, what will happen? That is my sort of lookout, because essentially it is my duty to get your money back and pay you out on time, because my revenue is directly impacted by your revenue. So it is always in my best interest to get good borrowers, and even if there are defaults from those borrowers, is to make sure that all of it, if not all of it, some of it is recovered within the first 90 days or 120 days and paid out to you. Like I was mentioning in the presentation itself, there is almost a 13-14% buffer for any sort of NPA. So even if NPAs do occur because of these cases, they will not affect your portfolio to a large extent, because that comes out of my fee. In case of delayed or non-payment by borrowers, there's a team which follows up with them. for the first 90 days. If not, then there are cash collection agencies that are deployed. But again, because these are the borrowers who are very sensitive to, stigma at work or stigma at home, they essentially they do not default on such small amounts. Is there a community forum for borrowers and depositors? So there is no centralized repository for the same. The RBI has not created a specific sort of, online platform where you can, go and sort of share your experiences. But I'm sure if you just, through Quora or other platforms, I'm sure you'll get enough and more information and reviews of platforms out there. The question is, can you give an example of a successful P2P lending platform? Success is a very arbitrary term, I think. I mean, I don't know what a successful P2P platform is. I think the success of an asset class is to make sure that the investor is protected. I think that is success, right? If the investor's capital and interests are protected, then that is a successful sort of asset class. So always put your money where you feel that, your capital is protected and your interests are aligned. Can an NRO account be opened at Indian bank in international location? I think the answer is yes, Saurabh sir. I'm not 100% sure of this, but I think you can do that.
We can.
Yeah. What is the aggregate loan limit of a single borrower at any point in time? So the good part is the aggregate loan limit across P2P platforms is 10 lakh rupees, right? So even if I want to, I can't borrow more than 10 lakh rupees across all P2P platforms combined. So the loan amounts will always remain small because by regulation itself, I can't give large amounts. Like essentially in my case also, there is a 5-6 lakh rupee executive MBA. That is the max amount that I cater to. Uske zyada log le. There is no product for me to cater to. And also you can't borrow more than 10 lakh rupees across platforms.
Thank you, audience, for your active participation.
I think there are a couple of more questions if you want me to take them.
Please.
Yeah. Overseas citizen of India can invest and they treat as NRI or they are treated as NRI. And are the loans all unsecured or any? As we can't securitize, ma'am, we can't securitize any of these loans. These are all unsecured loans. But again, like I was mentioning, please don't look at it as secured versus unsecured. Look at it as loan amount and tenure versus amount and tenure. These are short-term loans for small sizes for very, very specific purposes. So these are always paid out on time. And even if I securitize these loans, that does not increase my chances of recovery very, very greatly, as you've seen from the presentation also, right? It's not about secured versus unsecured. You just have to evaluate the willingness of the borrowers to pay back on time. What are the resources or support available for borrowers and investors who are new to P2P lending? So we provide all possible support. If you want information about the company, you can just go to our website. You can see the past performance. You can view our corporate presentation. Also, if you go to the RBI website, there are regulations and circulars available for you to evaluate. What are the P2P regulations? What is considered legal? What is illegal? How should platforms be treated? All these things are available on the RBI website also. In terms of company-specific resources, every company, if you want to know more about any company, please go to their website. All of them have to compulsorily publish NPA details on the website as well. Also, portfolio performance. So you'll get portfolio performance, past performance, NPA details, and corporate presentations on all websites. So if you just go to the website, these details are available. Are senior citizens offered higher rates? No, unlike FDs, we don't have, differentiated returns. Everyone is considered, is given the same return.
Are there any other questions?
I'll also provide my number in the chat box. If someone wants to just reach out directly, they can also do that. if there are further questions.
Thank you, audience, for your active participation. We hope that you find this session insightful. However, if you have any further queries, you may write to monica@nishkaera.com. I am dropping the email address in the chat box itself.
We would also like to inform the audience that we are coming up with another webinar on basics of life insurance and guaranteed income product. And that will be happening on 28th of January 2023. And we'll be sharing the details soon with you all.
Myself, Alicia, on behalf of Nishkaera, would like to extend our thanks to distinguished speaker, Mr. Sandip Chandran from Liquiloans, for taking his time and join us in the webinar and for helping us to know more about P2P platforms in much detail.
Thank you for having me, and thank you to everyone who joined. Thank you, Saurabh sir. Thank you.
This was an outstanding session as you have shared practical experiences in P2P platforms and enlightened our participants. I hope our participants have gained understanding about P2P platforms as an investment tool to grow wealth. We have also shared the feedback form link. I request you all to please fill the form. I'll share the link again. I would like to thank you all for joining us today for our webinar on peer-to-peer lending. I hope you found the information and insights provided to be valuable and informative. I, Alicia, would like to extend a special thanks to our guest speakers for sharing their expertise and experience with us. Your insights and perspectives were incredibly valuable and helped to provide a well-rounded understanding of the topic.
Thank you. Thanks.
I would also like to thank our team for their hard work in organizing and planning this event. Without their dedication, our effort, the webinar would not have been possible. I hope that you leave with a better understanding of peer-to-peer lending and how it can potentially benefit you. We look forward to continue to provide you with valuable information and resources on your topic. Thank you for joining us today. We hope to see you at the next event.